Good afternoon, everyone. We are approaching our final panel of the day. This panel covers an issue that many of you have dealt with over the past year and that we are certainly going to deal with in the year ahead. Mining through market volatility, an important component and important issue for many of us, entities, individuals alike. This is why we wanted to discuss this item in detail. Our moderator is Irene Gao, Head of Sales at BITMAIN. She'll be leading the conversation with a number of entrepreneurs who have dealt with it and who are navigating the growth and development of the Web 3.0 economy in this era of increasing macroeconomic volatility. Ladies and gentlemen, could you please give a warm welcome to Ms. Irene Gao.
Hi everyone, good afternoon ladies and gentlemen. I'm happy to be there and I'm Irene from BITMAIN. I'm the head of sales and it's my great honor to be invited as a moderator for today. Mining in 2022 experienced a lot of up and downs, and how could we prepare when we faced the soaring electricity cost and uncertainty market situation ahead of us? What should miners be more prepared for the markets and the time ahead? And how can we have apply the strategy to ensure everybody be more profitable and have a sustainable mining profit from the market fluctuation? So today we're going to have the topic, mining through market volatility. And first of all, I would like to have a warm welcome to all my panelists. And may I ask you all to make an introduction of yourselves and your company?
Okay, I'll start. Hi, I'm Nick Carter, general partner at Castle Island. Personally invest in miners, and we do occasionally at the fund as well.
Hey guys, this is Adam Richard. I'm with 2 Prime. We are an asset manager, and we help miners with treasury management.
Ryan Condron, CEO of Titan. We build mining pools, private mining pools for at-scale miners, and we're also heading up development of the Lumerin protocol for decentralized Web3 routing.
Chris Liu, Director of Business Development from Atlas. Atlas is the mining entity under the CTH Group.
Hey, Asher Genoot, President of US Bitcoin Corp. We're a self-miner, hoster, and operator as well.
Thank you. So as we are from different field of this industry, what's the most notable circumstance happens in 2022? Maybe from Asher?
Bitcoin went down and energy went up. Yeah, I think the markets have been tough, and as a miner, the strategies that you had last year, which was sprint at buying machines, finding energy, and building, does not work anymore. I think you have to focus on profitability, you have to focus on longevity and being able to have cash flows to manage through the period of time as long as it takes, where hash prices are depressed and energy prices are high.
Yeah, I think the current situation is pretty clear. It's a cyclic market. Right now it's bear market. But at the same time, we also see opportunities, like Asher just mentioned. While we're looking for sustainable and renewable energy in the market, we also focus on operational excellence so that we also partner with our partners, work together to go through all this winter. But as everybody knows, that in the coming few months, we've seen all those events happened in the general crypto market, as well as the hawkish stance from the Fed, which also impacts the entire market and our business in particular. But We think that we'll see more to come in terms of consolidation, M&A. So these are opportunities. We're not over optimistic. At the same time, we're not over pessimistic.
I'm optimistic. All I can say is welcome to the party. If you've been in Bitcoin for a while, you know that we've done this before, and we're going to do it again. But with mining, we have electricity costs. We have hard OpEx that we have to meet. So we leave the machines plugged in, we keep the electricity flowing, and we pay our power bills. And that's same as it always was. The markets are going to go down. Our electricity costs, if we do our contracts correctly, is consistent. So that's all I can really say is what happened this year. Well, a lot of people got wrecked. A lot of people are new to the community. A lot of people speculated. We had a lot of large miners that speculated. They didn't run their business correctly. We had a lot of exchanges that did not run their business correctly. So welcome to crypto, guys. I'll see you guys again in 4 years.
Yeah, I think that it's clear that a lot of the people in this space that are new don't know how to kind of manage through these cycles. And I think there's a lot of opportunity that's presenting itself right now. And I think the biggest takeaway for me is that, you know, those that are intelligently invested survive. And so if you don't know how to invest and hedge appropriately through this market, you know, you have hard times ahead for you.
I'll just briefly add one thing. For me, in the mining realm, one of the most interesting things that happened this year was the merge, actually, paradoxically. So one, it caused hash rate to increase because I believe some of these ETH miners turned on Bitcoin mining operations, at least that's my suspicion, which, you know, doubly increased the hurt for Bitcoin miners, existing ones. Two, it gave us a really good insight into the risks of proof of stake because we saw how much a portion of Ethereum stake became captured and block production. And I think, you know, you can use that as a way to demonstrate the sort of strength of proof of work, but I think it's also a bit of a warning sign that Bitcoin mining isn't strictly, you know, free of the risk of capture, especially as potentially MEV develops on Bitcoin. And we do need to focus our efforts on decentralizing block templating and not have such a fully centralized approach to block templating. So to me,
Yes.
that's one of the interesting, you know, things that I noticed this year is we did really learn about the, you know, infrastructure level risk in terms of like the freeness of the protocol.
We have really experienced the panelists here. So I would like to know what's your thoughts on the industry trend that you observed?
It's the same trend. We're in the same cycle, right? Like again, we're in the same cycle. We hit the low point in the market in 2014. We kept our heads down and we built. 2014, 2015, 2016. We started coming out of it in 2017. We peaked in the market in late 2017, 2018. The market turned again. We put our heads down again. We built 2018, 2019, 2020. And guess what happened? It came back up 2021. Right, and then we saw end of 2021, we went into like some type of super cycle because you had a lot more institutional money coming in. And guess what we're doing right now? We're putting our heads down and we're building again. So that's the trend.
Yeah, to me, it's like a classic capital cycle in a commodity industry. And I wouldn't even say it's that dissimilar from any other commodity industry. You have overinvestment during the bullish, you know, exciting periods, kind of like what we saw with shale gas, you know, lots of overinvestment. And then there's a bust. And the only difference is that Bitcoin mining doesn't get produced any faster. So that's the difference from other commodity industries. But it is a matter of just being prudent with your capital and your debt levels. And unfortunately, a lot of Bitcoin miners were not prudent. And so I think we'll see massive consolidation here. I don't think it's really even begun in earnest. So great opportunities for the better managed miners out there.
Yeah, I agree with that. A lot of M&A opportunities. I do think that one thing, and thanks for the analogy on the oil and gas side, because what we're seeing as the asset manager is we are seeing an evolution of the financial products and financial instruments that you can utilize. And I think that this industry will hopefully learn a lot from the oil and gas industry and use these financial instruments to create dependable cash flows. So that way you don't find yourself stuck in a situation like we've seen. And also I think that we're gonna see a maturation of the kind of lending agreements so that they come with hedging, and so that way the miners don't find themselves over leveraged and unable to pay off their debts.
I think adding to that a little bit, it's personally as an operator, I've enjoyed building during this period of time, albeit difficult, because you have to just focus on fundamentals. You have to focus on building the right business with the right energy strategies, with the right focuses on efficiency, on profitability, where last year, I mean, it was a sprint for growth, right? It was a sprint for how quickly can you get miners plugged in, and you know that you're overpaying for miners. You're overpaying for infrastructure because there's so much demand. And that, I think, from how I think about the market is to what Nick said is, as long as you're a top operator, the hash price will adjust accordingly and you'll be fine, right? Regardless of where Bitcoin goes, you'll have short-term pain or short-term massive benefit, but it'll normalize over time. And I think folks that enjoy the challenge of operating a super efficient facility and a super efficient business, you focus on the right fundamentals and you ideally hold to those as the market grows and you're able to deploy capital as prudently and at scale.
Yeah, I think all of us have experienced at least more than one cycle. So there's no big difference from the previous ones. But what we've noticed this time is that a lot of players came into the market thinking about, there are a lot of easy money on the floor, and then so their strategies were like pretty irrational, and then so what we've seen is that they're over leveraged, and then I think this window helps everyone to calm down and then think deeply and then really deploy the right strategy in terms of how you operate, in terms of how you do fundraising, in terms of how you work together. And then as an industry, we have different players along the entire ecosystem, and then we've seen that we're long-term optimistic, and that we want to work together to just go through this winter, keep our heads down, keep doing the right thing, and then we think it'll come back, and then we're going to thrive again.
I think people outside of the industry, I would say one of the closest industries that are relevant is energy companies. And frankly, we spent, call it a year and a half, 2 years educating energy companies, getting them comfortable from the smallest to the largest, at least in North America, to the point some energy companies were doing joint ventures, investing in mining, doing PPAs at the very minimum. I remember when we started the conversations, they didn't even want to hear about selling us energy, right? And then the conversation evolved to, we'll deploy capital with you and do a JV structure. And I think where we are now is, frankly, a lot of them has been screwed, and they are reassessing this industry and reassessing the creditworthiness. And then on the other side, you have folks that are still unrealistic about what they can charge because people overpaid, and they believe that the margins still exist, and they're still looking at precedent from last year on how deals are done. So I think the energy industry moves slowly, and it takes some time to make a decision and takes some time to act, and equally as much, it'll take them time to react to what's happening right now, and we'll have to re-educate them and get people comfortable again and really understand the risk profile of mining and how difficulty actually works. I don't think many people understand what difficulty is and how that impacts mining.
Well, and the energy industry is now waking up to the fact that miners are their best friend. I mean, they are, if only we knew of a technology that used 100% of the energy 100% of the time that you can produce. And that's mining, that's Bitcoin. And a lot of energy producers are realizing that you'll never be able to properly load balance a renewables mining grid that's run by solar or power. You'll never be able to balance that without mining. So rather than doing load following, you're going to do production following. And that's actually a model that we're just now starting to get into in Texas and other places around the US, is this idea that miners are actually going into curtailment whenever the grid needs more electricity. And power producers are now realizing this is awesome. We can now build out our production facilities larger than ever, and now we have a customer that's going to take all of the electricity for us. We don't have an electricity shortage in this country. We don't have an electricity shortage in this world. Producing electricity is not bad for the environment. There are great ways to produce electricity. So now we just actually get to optimize it because we have better uses for it in mining. Anyways, that's a whole different discussion.
I was just going to add to that. You know, we were both in Texas, was it last week or the week before, at the Texas Blockchain Summit, and the policy conversation is evolving. You know, Ted Cruz gave comments at that summit. He has a full command of both Bitcoin mining and its intersections with the energy sector. So it's becoming kind of segmented on a per state basis. On the other side, New York Governor Kathy Hochul signed into law recently a bill which is a moratorium on certain types of Bitcoin mining in the state, targeting a miner that operates a gas plant. So, you know, the policy conversation is evolving. On one hand, you have policymakers that really have begun to understand benefits of mining and how it can potentially stabilize grids and, you know, effectively increase the payback periods or shorten them for new renewable installations. And then on the other hand, you have certain states that are fear-mongering and are concerned about energy shortages and are attacking Bitcoin miners. So it seems to me that it's becoming a bit of a states' rights issue, and it's becoming fractured along state lines.
Thank you. So as everybody said, mining is a capital density industry, and with the significant growth focus of the industry, how do you see those institutional investors get involved, whether they are more interested in buying Bitcoin or get involved in Bitcoin mining? Want to start, Asher?
I think last year, for many miners, the strategy was raise capital, build infrastructure, mine Bitcoin, and hold Bitcoin, and give exposure to your investors. But I really think the business is split into different types of risk profiles, thus requiring different types of investors with different types of expectations. So the business of building infrastructure is very different than the business of buying miners and mining yourself and getting exposed to that versus hosting for other folks versus operating facilities for other folks and getting paid to operate. And I think the treasury management piece is a treasury management strategy that a company has. And so the way that we've approached the kind of most recent chapter in the industry is we have three distinct verticals. We buy machines and we self-mine. We have facilities that we operate and we host, and so we're a landlord really. And then there are some lenders that have come into possession of assets, and we come on and we operate those facilities for them and are a strategic operator for them. And so we've siloed these three different types of businesses, and now we will be raising money at these three types of holdcos because the risk profile, the capital needed differs, and you attract different types of capital.
Yeah, I agree with Zasha, what just mentioned. So basically, Alice operate in a very slight model. We do not own any sites by ourselves, but we do understand hosting service providers are heavily, you know, some of them are heavily leveraged, and then so we are working with those players all together. And then I think at the peak, we saw that in the US stock market, there are around 20 public companies operating. And then if you look at their balance sheet, they've obviously experienced pretty harsh time. And then, well, like we just mentioned previously, during the bull market, everybody, you know, borrow a lot of money, and then some of them even get a very, very high interest rate, short-term debt, and then now they're, you know, suffering from this. And then, but in the longer run, I think this winter brought us, again, the rationale, people think rationally, and then how they're going to operate. We do think that if you have a strong operation capability, like what we do, you are able to survive this, you know, winter, and then work with the players together, and then we'll just go through it, and then exactly. So that's what we've observed, and we do think we'll see a lot more consolidations and M&As coming up. But right now, we've only seen a couple of small transactions. There's no public, you know, big deals happening at this moment That's our understanding.
Yeah, not yet. They're coming, I'd imagine. So I think I registered a domain in 2013 called minerbuy.com because me and my buddy were doing a lot of the profitability calculations for like over 100 different networks to find out what we should mine first. And that was always the question that we always had was, do we buy more mining equipment or we just take the money and buy Bitcoin? And we actually found out for a lot of the networks, it was actually just better to go buy the coin than it was to mine it, just because the headache of mining it. But not everyone has the ability to go buy Bitcoin or just buy whatever coins there are, right? We have to remember there's a lot of people around the world that can't just log into an exchange and buy Bitcoin, but they have access to electricity. So that was one area that we really looked into that I thought was really fascinating. But as we scale out, we're like, okay, so do we invest in just buying Bitcoin, or do we invest in energy infrastructure and miners? And the reality is miners and energy infrastructure do solve a lot of problems on remote power grids. They solve a lot of problems in places around Africa, in places in South America. And this isn't just a straight capital play of investing in Bitcoin and hoping it accumulates value over time, but we're actually building infrastructure. So as we start thinking about Bitcoin mining as being this counterbalance to load following for energy infrastructure, then we just have a completely different mindset of what we're actually investing in. We're actually investing in rural communities and rural power production all around the world. And that's actually what's going to be the future that's driving the cryptocurrency proof of work networks. And that's what really excites me. It's not just about do you invest in Bitcoin or do you invest in miners? It's we're investing in infrastructure that's actually changing people's lives and improving power infrastructure.
One comment to that quickly is, I think that's exactly right, but what as an industry we need to do is help people differentiate the ability to do that, which is longer term, versus the ability to not do that and not use clean energy resources, not balance the grid. And I think, for example, we just took over a site for a clean energy lender. They lent against a miner, and I was meeting with one of the CTOs there, and he's like, we invest in this because we thought this would help with clean energy, but we're behind the meter at a nat gas plant, right? And so I showed him another site we have, which is a behind the meter wind power plant, right, with a renewable company. And I said, it takes time. Energy companies move slowly. Them to actually understand this and adopt this takes time, and I don't think a couple sites that don't push that narrative should blanket the industry of this is what it is. That opportunity is definitely there, and the renewable companies we've spoken to understand it, and they understand the biggest problem with renewables in the US is curtailment, because there's not enough transmission to actually take that energy, especially with the amount of builds that are coming in with the IRA program as well.
I think if we can actually get these institutions to receive the education you just mentioned, then they'll see the opportunity to really financialize this industry. If that happens, I think there's gaps where they can bring value, and they're going to do it at regulated exchanges. But I think that creating indices for this industry will add much more efficiency. And I think that it'll help stabilize the market and make it much more sustainable to continue to be able to grow and expand and hopefully build out that infrastructure that Bitcoin mining promises.
Yeah, I'll just add that I've been remarkably surprised by miners' unwillingness to hedge their exposure to the underlying. I interviewed a whole bunch for my podcast of mining CEOs and asked them all the same question: do you want to get gig along Bitcoin, or do you want to run a fiat business and lock in some nice margins? And they all said, well, our shareholders want us to get long Bitcoin. And that's exactly what they did.
I'm sure Core's regretting that.
They had exposure to Bitcoin, they had exposure to ASICs, so Bitcoin through the ASICs, and then they held Bitcoin themselves. And so they were just as long as possible, and they acted like high beta assets. And if you look at most of the public miners, they've underperformed Bitcoin on the downside this year. And you also have the risk of total failure if they get into too much trouble on the debt side and then they go out of business. So historically, it's almost been safer to invest in Bitcoin itself because there's no risk of ruin. The question is, can there be a new breed of miners that are just better stewards of capital and aren't as liable to get themselves into trouble? And I think it does come down a lot to these hedging and more financial instruments, which we haven't seen so far.
Well, and that comes down to sound business practice too. Like you're running a business, so you don't speculate on the assets that you're mining. Where it's almost I would say it's irresponsible for large miners that will just tout that, oh yeah, we're mining and we're holding everything that we mine. Like, okay, but it's a very speculative asset, and you have a business you need to run. So if that's their treasury management and people invested with them knowing that that's what their treasury management is going to be, great. But if it's not, that's a lot of risk, and you're not hedging that at all. So,
I think the transition there is early on, before you actually had an ETF you can purchase, institutions bought miners to get exposure to Bitcoin, right? Like that was the first iteration. I think now over time is if you actually want exposure to Bitcoin, you don't need to buy a miner, you can just buy exposure to Bitcoin. And I think now you'll have a differentiation, and some miners will be focused on different parts of that value chain, and that's what their business is going to be.
Thank you. That's wonderful. So since we almost run out of time, what would be the final piece of advice you want to give to the audience, or you think you can give the audience and give them away to take away?
Stick it through, keep working hard.
Just keep your head down, and then be confident, and then you will see the spring coming up pretty soon.
if you're going to borrow money, make sure you have a long enough runway to eventually pay it back. Or if you're going to mortgage your house to buy Bitcoin, just look at the trend of the way the markets run. And the last piece of advice is just wait 3 years. If you need the money now, sell the Bitcoin now. If you don't need the money, then hold on for 3 years, because technology has not changed. The promise of what Bitcoin can do to revolutionize the banking world has not changed. What we are working on is going to change the world from personal identity to communication to banking. It already has, and it's going to exponentially just rock the foundations of what we've known to be the status quo in so many industries. So I'm calling it 3 years. Hold on.
I'd say, yeah, be patient. If you are in a position to do something meaningful, now is a good time to be active, build, and I think that 2023 is going to show some interesting signs of the large institutions in this space indicating that they actually are serious about being innovators and helping this space evolve.
Yeah, if you are able to survive this bear market, I'm sure you'll do well on the other side. From the perspective of miner, startups, VCs, don't take on too much leverage and survive.
Thank you. I think that would be very helpful. And thank you all the audience, and especially thank you Raymond and Allah's team to bring this happen. And I hope you all enjoy the dinner party.